Hey, Salvador Brigham here. Welcome back to the Crowdfunding Demystified YouTube channel. And today we're talking about regulation crowdfunding and specifically what are some of the new rules that were enacted at the beginning of 2021 that are going to be basically now allowing you to raise more with equity crowdfunding. So let's get into this, some of the new rules and these kinds of things, but also keep in mind that these rules are always changing. So if you're watching this video at a later point in time, make sure you go and you Google and you do a little bit of your own research. I'm not giving legal advice here. I'm not giving tax advice, anything like this. This is completely my opinion. If I am wrong about any of this stuff, make sure to fact check me. So that's just kind of like an asterisk, a caveat before getting to this video. But now that we did, let's get into this. And also more specifically, what this means for you as an entrepreneur. On November 2nd, 2020, the commission, the SEC, voted 3-2 in favor of amending the rules in order to improve the overall regulation crowdfunding framework. So first of all, the limits were raised. So in the old limits, you could raise $1,070,000 in a 12-month period. And I wrote about this in my book, Equity Crowdfunding Explained, which is now going to have to be updated, obviously. But the new rules are basically that you can raise upwards of $5 million under regulation crowdfunding. Considering that the initial seed round for most startups is around 2 million, 2.2 million, this is a major deal because it really unlocks the floodgates for capital pouring into some of these startup companies. You can now do a regulation crowdfunding campaign upwards of $5 million, which is a 5x, obviously, increase than what were previously were the regulation crowdfunding rules. Number two is the amount that you can invest in these startups has also increased. So reading it from word by word, it removes the investment limits for accredited investors and it uses the greater of their annual income or net worth when calculating the investment limits for non-accredited investors. This means that there isn't the same limitations that were once experienced with regulation crowdfunding, meaning people can put more money, more capital behind their investment when they're choosing to invest in a new startup company. The big number three was that based on the COVID rules, there's now an 18-month extension for the existing temporary relief, providing an exemption for certain regulation crowdfunding financial statement review requirements for issuers offering $250K or less of securities and reliance, an exemption within a 12-month period, which basically means now if you're raising upwards of $200,000 or less, then you won't have the same level of audited, financials or any, those kinds of things. You will have much less stringent, let's put it that way, rules when it comes to this more accounting side to the regulation crowdfunding rules. And this is temporary, just putting that out there. Quarter 3 of 2020 was actually a record for many of the equity crowdfunding platforms out there, including StartEngine. WeFunder also saw some great records this year. Just kind of quoting it here, in quarter 3 alone, the two largest platforms, WeFunder and StartEngine, raised a combined total of $40 million under regulation crowdfunding. Now, obviously, compared to venture capital and like all these other metrics, it's not as big as that, but it's growing. I see this as like almost Kickstarter 2009, 2010. We're just getting to the beginning. You think of it like a wave, right? You're in a really nice beach and you're out there in the water and you can see a wave in the distance, right? And it's beginning to crescend a little bit, but it's not yet there where you can really surf on the wave, right? Or you can really boogie board on it, or body surf. That's what I love doing on the wave, right? So it's like it's beginning to form something that you look at like, oh, this wave is gonna be a lot bigger once it gets to shore. That's kind of how I feel about this whole regulation crowdfunding thing. In contrast, venture capital deals hit a 10-year low, right? So while regulation crowdfunding is going up, venture capital is going down. I'm not saying it's a bad thing, but I'm kind of more like a startup. I like a startup that got moxie, guy that got some gumption. So it's kind of cool when startups are doing really well and they're using these new instruments. So I think it's exciting, but I'm not trying to put venture capital down at all, obviously in this video. Now that we went over some of that legal to do or to know and we got that out of the way, what does this mean for you as an entrepreneur, or what does it mean for you as an investor if you're interested in that? First of all, this means that you as an entrepreneur, this is the easiest time to raise investment capital in the history of the world. And I know that's a really big, grand statement, like the easiest time in the history of the world. But if you think about it, it's true, right? The stock market came around in the 1900s, right? If my history and my memory serves correctly. where people could actually offer shares of companies in an actual secondary marketplace. So the stock market, obviously, if you're not familiar, doesn't offer the initial shares of a company that are being sold. In the stock market, when you go to Schwab or you go to Fidelity and you trade those shares, they're actually just secondary market shares. So they're people that are swapping and trading ownership in a company, and the price that people assume the ownership to be is based on the buying and the selling of those shares. It's not the initial offering of the stock. The initial offering of the stock usually is sold to a middleman, let's just say like an investment banker or something like that, who take on the risk or shoulder the risk, and then they sell at a markup to the public. Now, there are a lot of different ways of obviously offering capital to the public. You could do a private placement and like that kind of stuff, or you could go traditional route, just getting some angel investors, like etc. But those would be initial shares. One of the cool things about this is that for the first time, big startups and small businesses can offer initial shares of a stock of a company, ownership in a company. They can offer that to everyday ordinary Americans and everyday individuals around the world, right? That is amazing, because you think about it, if you were able to invest in the initial round of Uber, you'd be a multi-millionaire, right? If you were able to invest in Airbnb or Canon, or back in their heyday, like IBM, right? If you were able to invest in the early stage of these companies, you would then be able to have a very good financial footing when it comes to your investment portfolio. So what this is doing is it's opening up opportunity to people who are just ordinary, everyday people. Think about Bitcoin, right? Recently, at the time of watching this video, Bitcoin I think is down around 30K, right? We've had so many people become millionaires because of Bitcoin, because of the rapid growth in the way that people are valuing that currency. Now, Bitcoin is a bit more speculation, obviously, but still, an ordinary person can become a millionaire in record time because of this financial instrument. And before, that wasn't the case. You can't, there was no virtual currency. So as we grow and as the internet develops and as regulation catches up to the developments in the internet, we're going to see more and more opportunities for you to become wealthy. And the same thing happened obviously with like the dot-com boom way back in the day in the 2000s, where a lot of ordinary individuals became wealthy. And this is going to happen more and more and more the more that the internet develops, the more that regulation catches up to that, in my opinion. Now, I'm saying that that's obviously not everyone benefits from it, but it is opportunity. For you as a startup entrepreneur, as a creative type, as an innovator, that basically means that number one, you don't have to go through a major gatekeeper in order to raise funds. You don't have to go approach a venture capitalist if you don't want to. It's great to have a lead investor, obviously, but you can approach the crowd, right? You can run an equity crowdfunding campaigns, particularly at the moment of recording this under 250K. It's a lot easier to as well. The other thing is that now you can kind of replace a lot of these other funding rounds, maybe from 0 to 5 million, that kind of round. You can replace this with more of an online offering that allows you to get other people involved, to develop some press attention, to get also some validation potentially, to get more networks when it comes to people you can work with. So some of the investors might have really good networks in your particular industry, might know distributors or something like that can really help out. And think of it more of as an accelerator program rather than thinking of it as, I'm just opening investment up for the company. If we study the way in which the economy has grown over the years, so just starting again like 1900s, the secondary market really just started to come into being, right? Which is the stock market. And then we would have the NASDAQ, and we have all these other, the S&P 500 now, Dow Jones. Obviously, we're talking about over-the-counter markets. So like I was talking more about the NASDAQ and talking about like, some of these other major exchanges. I'm trying to think of what some of the ones are in China, which I'm just not coming to my mind right now, but you can look and you can see in China as well a lot more stability and a lot more growth in their financial sector based on the trading of stocks in the financial markets. I can't think of the index, but if you do, you can leave it in the comment down below. But so this secondary market was established in the 1900s in America. The secondary market for shares is being established in third world countries. I honestly don't think China, it's kind of like in the middle stage, right? And as well as in other countries, these secondary markets have been established in some cases, right? One of the things that we're going to see eventually is that with regulation crowdfunding, it's going to transition from just being a primary market issuance of shares to eventually having a secondary market where you can not only invest in a company, but you can also have liquidity, which is you can maybe trade your shares among other people who own ownership in that particular company, or other people that are on more of a secondary market that's somehow attached to that platform or to other shares as well, right? So kind of think of it almost as like you have Bitcoin, right? And then you have Coinbase. You have Bitcoin, the actual currency, and then you have all of these markets where you can trade a Bitcoin. That's at least where I'm trying to go with this argument. The more educated you are about what is happening right now with equity crowdfunding, the more likely you can take advantage of this opportunity, either in terms of launching a company, raising money for your existing company, investing in new companies that are out there. The more that you can sink your teeth into this rapidly expanding new base and really begin a foundation before the big boys come in, you have the big institutional investors come in and begin to have their own say in this little marketplace. So I think it's a really ripe time for disruption, a really great way to get validation, to get investor capital, to get potentially pre-orders as well, which you can offer on some of these platforms, to get some press and media attention, and to really democratize, I think, this entire process of fundraising. So I'm super excited, as you can tell, and something I think is gonna be really cool this year. So I just wanted to bring a little bit of that news tip to you on this channel. Hope you enjoyed this video. Leave a comment down below if you did. Come subscribe to the channel for more content like this, and I will see you next time. My name is Sal.